I'm Steve Spencer from SMB Capital. Today's video is what I like to call buy the news trade. And it's not exactly what you're thinking it is. So stay tuned. So I'm going to walk you through in great detail what I mean by a buy the news setup. We're going to take a look at the technical reasons for this setup. We're going to take a look at the fundamental reasons for this setup. I'm going to show you the process, how it became our #1 in-play idea to trade yesterday, and our #1 second-day play for today. Now, the process that I used to arrive at this being the #1 stock in the middle of a very busy earnings season day yesterday is something that we teach all of the traders on our desk. We have a 2-hour free workshop where I spend 30 minutes going through this exact process. If you're interested in learning how this became the #1 stock yesterday, and if you're interested in learning 3 high reward, low risk setups, click on the link above to sign up for the 2-hour free workshop, which will not take you away from this video at all. So check it out. So getting into the details of this particular setup, and the stock we're talking about is Activision, ATVI. Those of you who are familiar with the gaming stocks, I'm sure are very familiar with ATVI. It's in that sector with TTTO, Take-Two, EA, Electronic Arts, which was one of our big stocks over the last few days as it moved up from $80 to $100 a share. And had a little blow off top the other day. These stocks are momentum stocks. Especially more recently. People piled in for a period of time, ran them up quite a bit, and they've hit a bit of a rough patch in the last 6 to 8 months or so. One of the criteria for a buy the news setup is something that has been beaten down over the recent months, generally 30 to 50%. And so when I said to you at the top of the video, this is not what you expect, this is not a setup where we have good news that comes out and we look how to get long. This is actually quite the opposite. It is bad news comes out and we look to get long. A couple of years ago, probably 3 or 4 years ago, I think I did a series of videos on a sell the news. That was, I think Apple was one of them. If you Google SMB sell the news, you probably can find some of those from our blog years ago. Probably not quite as good quality as we do today, but it's the opposite of what we're talking about right now. So let's go through some of the criteria for a buy the news setup. #1, we already talked about it. It's come down quite a bit on the higher time frame. In this case, if we look at the daily chart in ATVI, you can see that in the fall, this was an $80 stock. It had come down to about $50 a share, then was moving sideways from December all the way up until this week between, let's call it $45, $50 a share. And then coming into earnings, it sold off pretty hard from the mid-40s all the way down to $40 a share. So you can look at that, it's basically cut in half coming in. So that's #1 criteria, it's been beaten down. Then, like all of the stocks that we look at, these in-play names, we want to see what happens after the catalyst occurs. So we look at the price action right after the earnings release happened. And we'll take a look at that chart as well. The next thing we want to see is after the reaction to the earnings catalyst, what does it do when the market opens? And basically, we're looking for the stock to build a case to confirm our thesis. And then finally, the other thing that we'll look at is during the morning meeting, we'll put in our key levels. Those levels are going to be based on the higher time frame, the 30-minute multi-week chart, and then the after-hours price action if it does a lot of volume. And in the case of this, we'll see when we look at that after-hours action, it actually did several million shares, so that's really good information. So it was kind of a confluence of things, a confluence of events that made this the #1 in-play name, and let's get into it and take a look. So here was the actual news release. Activision Blizzard gives week 2019 guidance, says it will slash the workforce. We actually posted our morning meeting from yesterday where I actually talked about it, and we talked about it being a buy the news. The reason why this piece of news was so telegraphed was we saw it in the price action coming into earnings. It came off from the high 40s to the mid 40s and then sold off really hard those 2 days before earnings from $45 down to $40 a share. So here we are coming into earnings. It's sold off to 40 already. It's bounced up to 41. the earnings release comes out after the close. It's really bad, the lower guidance, and let's take a look at what it does. And we're already in our mindset of, it's come off from the mid to high 40s from a couple of weeks ago. It sold off to 44, then it sold off to 40. And so what we want to see is a quick kind of retest of the low and then people coming in to buy. That would be our first indication that when the market opens the next day, they reported after the market close that this is going to be something that can work its way higher. So what happens when the earnings release comes out and the really bad guidance comes out? Boom, you can see 42 right down to 40 immediately. And look at the volume there. I've circled that volume for you for those 30 minutes. It's very unusual for a stock to trade hundreds of thousands of shares every few minutes in the after hours. And that's exactly what we saw in this case. It came down to 40, about 500,000 shares were bought. And then on the next bar, boom, right back up to 42, another 500,000 shares. And then it starts to trend all the way up almost to $44. So that is exactly what you want to see when you're looking for a buy the news setup. Something that's beaten down, the bad news comes out, gets hit, gets bought up immediately. Remember, we saw this in AMD a week or two ago as well. They gave really bad guidance, initial reaction down, big volume comes in, it reverses. So not only is this what we want to see from a price action standpoint after the release, we now have levels that we can trade against. And what does that mean? That it's the number one thing as traders that we need to do is to be able to control our risk. If we have levels to trade against, it's it's much easier to control our risk because we know we can buy into those levels and we can get out if those levels fail to hold, if buyers fail to materialize. So let's go to the next morning. So next morning, we do the morning meeting, we do the game plan. It's the first stock we talk about. We have our support, S1, S2, S3, and it's reverse, right? S3 is 41, S2 is 41.50, S1 is 42, R1 43, R2 44, R3 45 and a quarter. I've labeled it on the chart as such, so I probably didn't have to just say that. It's labeled right there for you on the chart. So ideally in these scenarios, when I'm leaning long and I'd like to play it on the long side, I'd love to buy it into S2 at least. In this case, that was 41.50. Sometimes you don't get that. Sometimes best case is S1, and sometimes first move is up and it goes from R1 to R3 right away, and then we look to buy it on the pullback. Perhaps it'll pull into R2 and hold, and then it'll bounce to R3 and take that out in trends for the day. If it fails to hold R2, then R1 is kind of our drop dead price. And again, this is about, I'm constantly updating my expectations based on what the price action is. Coming in to the open, I want to trade this on the long side. I saw the big bounce in the after hours. I would love for it to kind of flash down through S1 into S2 for below 42, because then my risk reward from the 41.5, 42 area up to 44, 45 is probably better than a 10-to-1 risk reward. But I'm mentally prepared that if I don't get that pullback, if the first move is up like it was in this case to 44, to buy the pullback into 44, 43.80, which is what I did. It bounced a little bit, then failed, hit out. Middle of the day, pulls back into R1, which now becomes our support intraday. You can see it curls up. Eventually in the afternoon, we're not showing it on the chart right here, it actually hits R3. And buying at the 43 level, which was R1 and now becomes our support, you're really not risking more than 20, 30 cents there. And your upside obviously is to the morning high, which is about 2.25 above where you're buying. So you're looking at it, already from your intraday range established, a 1 to 10 risk reward. Even if you only held 30 to 40% of your position for that entire move, you're still looking at a 1 to 5 risk reward. That ended up being, I think, the trade of the day, other than the quick momentum move above R1 right on the open. So traded great. I wanted to kind of zoom out and take a look at next day, which was today. We had it as our number one stock today. On the notes, basically the notes said for trading plan, as long as we can see this thing holding above 44, maybe we take a move where we take out yesterday's high and then we trend up higher. First move today again was up. I think in the notes Jeff had 44.50. He did as potential support. First move was above that. It consolidated for about 20 minutes there, and then it trended very nicely through the prior day's high, which was 45 45.30. And once you get above the prior day's high, which I guess you can see there, that's still marked up from yesterday. That top blue line there is just traded for a half of an ATR. It's day 2, it's not day 1, it's not going to be as volatile. A half of an ATR in this case would be to 46.25. That is kind of where it stalled out there over the next half hour. It did eventually move higher before pulling back in. And hold that last 25% as a swing. It's now moved in. If I show you the higher time frame daily chart, what you can see is it's now moved back into that consolidation period we talked about at the beginning. We're now looking at on a daily chart, not on a 30-minute, but it's basically back in that 45.5 to 48 range. And now maybe we'll spend a few days here, and perhaps it'll break to the upside, test that 48, eventually test $50 a share. The other thing to keep in mind is we are in a strong uptrending market. That's been the case now for 4 or 5 weeks, when that was confirmed in kind of the second week of January. And so people are looking for things to buy. This is a stock that's beaten down, sold off really hard. We already saw that on the daily from 80. And people are thinking about in terms of risk to reward. If I'm buying in the low 40s, if this thing gets back up to 50, I'm looking at a 20 to 25% of upside. There's other people who are probably even thinking more aggressively than that on a higher time frame. And so that's kind of where we are. I wanted to give you one little last tidbit, cheat sheet, things that I use when I'm doing my analysis for deciding whether or not something has upside, bounce potential, is analyst price targets. You've probably heard me talk about analysts quite a bit in these videos over the years. Analysts really aren't good for their predictive value in terms of saying, oh, this stock is a long, it's going to go higher, or the stock is not a good long, it's going to go lower. What they're good for is kind of how they react after the catalyst happens already. And all these analysts had higher price targets. The way that I use them in this case is, here's a few examples, where they cut their price targets to. I like to see where the stock is trading in relation to the price targets which they've lowered. Well, most of these analysts were bullish on the stock coming in, so they were completely wrong. They were bullish at 60 and 50 and finally down at 40. You're not following what they're doing in terms of that they're necessarily right. What you want to see is what they bring their price targets down to. If they bring their price targets down to 20%, 30%, 40% above where it's trading, then these people, bigger players are going to say, okay, well, the stock's beaten down. These 4 or 5 analysts have now brought their price targets down to 50. Like just looking at the list here, 56 from Wedbush. Barclays brought their price target from 59 to 55. I guess they already had a pretty low target, so they just brought it down a little bit. Needham brought their target from 60 to 50. Credit Suisse is always the worst. They had a $70 target. Credit Suisse, CS is, other than DB, they're kind of the worst money center bank. So they brought their target from 70 to 64. The other analysts really didn't exactly have the worst targets initially. Credit Suisse from 70 to 64. But the ones that were more in line, they're at 50 now, they're at 56, they're at 55. I have confidence that people are looking at, buying at 41, 42, 43, even 44, that they can play this up to the low 50s where these lowered targets are over the next few months. And so that's just one of my little cheat sheets. If you see the price targets actually coming down to where the stock is trading or actually below where the stock is trading, you're not going to have as many bottom fixtures. They might bounce a little bit, but you're not going to get those bigger multi-day moves usually or multi-week moves to the upside. So the stock is, by the news, it's a negative news catalyst. The stock has come off 30 to 50% on the higher time frame. Hopefully coming into the catalyst, in the days coming in, it's gotten hit as well. We look at our price action after the numbers are released. Do we get good volume to confirm that there are other people thinking the same thing that we are? At least a few 100,000 shares. In the case of ATVI, it was several million. And then the next morning, if we don't get our pull in our best case scenario coming into S2, if it's holding above R1, that's what we'll use to trade it from R1 to R3, and then look for a swing if we can get a close above R3 either on day 1, day 2, or day 3.